Welcome back, my friends. Airbnb reports continued deceleration in nights and experiences booked. Airbnb said nights and experiences booked in the second quarter increased by almost 11%, missing analysts' expectations. During the quarter, the company introduced rooms as an affordable option for renting a bedroom. What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities, and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the healthcare professional knows the patient identity. Airbnb shares slid as much as 6% in extended trading Thursday after the short-term home rental company reported a smaller sum of nights and experiences booked in the second quarter than analysts had projected. Here's how the company did. Earnings, 98 cents per share, versus 78 cents per share as expected by analysts, according to Refinitiv. Revenue, $2.48 billion, versus $2.42 billion as expected by analysts, according to Refinitiv. Airbnb's revenue grew 18% year-over-year in the quarter, according to a statement. Net income reached $650 million, compared with about $379 million, or 56 cents per share, in the year-ago quarter. The company reported $19.1 billion in gross booking value for the quarter. That was up 12% from the second quarter of last year and above the $18.99 billion consensus among analysts surveyed by Street Account. Airbnb said it had 115.1 million nights and experiences booked during the quarter, up almost 11%, but less than the 117.6 million Street Account consensus. Nights and experiences booked increased 19% in the first quarter. Gross booking value per night, at $166.01, was up 1% year-over-year. With respect to guidance, Airbnb called for $3.3 billion to $3.4 billion in third quarter revenue, or 14% to 18% growth. Management called for a modest sequential acceleration in nights and experiences booked. Airbnb still sees plenty of service opportunities that could add to revenue growth, CEO Brian Chesky told analysts on a conference call. He said there are plenty of services people can buy when they stay in hotels and resorts that Airbnb has yet to make available to its guests. During the quarter, Airbnb introduced rooms in an effort to play up the appeal of affordable private bedrooms to rent out, at $67 per night on average. Notwithstanding the after-hours move, Airbnb shares have risen about 64% so far this year, outperforming the S&P 500 stock index, which is up 17% over the same period. On average, Wall Street analysts predict that Airbnb's share price could fall to $138.11 by July 25, 2024. Airbnb can best be thought of as a disruptive innovation. By disrupting the traditional hotel industry and creating a more authentic travel experience, they have transformed the way people think about travel. Of course, success of companies like Airbnb are somewhat dependent on a good economy. And, the economy today continues to surprise economists with its resilience. Morgan Stanley is crediting President Joe Biden's economic policies with driving an unexpected surge in the U.S. economy that is so significant that the bank was forced to make a sizable upward revision to its estimates for U.S. gross domestic product. Biden's Infrastructure Investment and Jobs Act is driving a boom in large-scale infrastructure, wrote Ellen Zentner, chief U.S. economist for Morgan Stanley, in a research note released Thursday. In addition to infrastructure, manufacturing construction has shown broad strength, she wrote. As a result of these unexpected swells, Morgan Stanley now projects 1.9% GDP growth for the first half of this year. That's nearly 4 times higher than the bank's previous forecast of 0.5%. The analysts also doubled their original estimate for GDP growth in the fourth quarter, to 1.3% from 0.6%. Looking into next year, they raised their forecast for real GDP in 2024 by 0.1%, to 1.4%. The narrative behind the numbers tells the story of industrial strength in the U.S., Zentner wrote. Morgan Stanley's revision came at a pivotal time for the Biden White House. The president has spent the summer crisscrossing the country, touting his economic achievements. Together we are transforming the country, not just through jobs, not just through manufacturing, but also by rebuilding our infrastructure, Biden said Thursday during a visit to a Philadelphia shipyard. The White House has dubbed this brick and mortar economic growth formula Bidenomics, a phrase originally used by Republicans to jab the president, who co-opted the term as a badge of honor. In addition to his legacy, Biden has also staked his 2024 re-election bid on Bidenomics, betting that strong economic growth and a campaign built around kitchen table issues will ultimately drown out Republicans' culture war outrage. With 16 months to go before Americans cast their ballots for president, Biden's political fortunes, for the moment, appear to be improving along with the economy. This report confirms what we've long said: our strong and resilient economy is Bidenomics in action, White House Assistant Press Secretary Mike Kikukawa said in an email. The president's economic agenda is spurring investments in manufacturing and infrastructure that are creating jobs and supporting workers. Wall Street's AI frenzy and strong bank profits send stocks higher. Wall Street's frenzy around artificial intelligence helped push stocks to their best level in more than 15 months Tuesday, along with stronger than expected profit reports from several big financial companies. But economists said underlying sales trends, which exclude automobiles, gasoline and other items, were stronger than expected in June. A separate report said U.S. industrial production contracted again last month. That was a surprise to economists, who had been forecasting a flat reading. Altogether, the data seemed to reinforce the heavy bet among traders that the Fed will continue raising interest rates, but the July raise could be the final hike of this cycle. High rates undercut inflation by bluntly slowing the entire economy, dragging down prices for stocks and other investments. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.